Okay, I think that just worked fine now. That is so weird. Okay, it says it's live now. It says we've been live for about 12 seconds. I'm using the brand new YouTube Studio live streaming software. The old live streaming software actually worked correctly, but they're forcing me to use this one. They're getting rid of the old one. So I have to, it's just ridiculous. But anyway, the Dow closed down 1,000 on global supply chain fears. So the CV problem, Cerveza problem, whatever the heck you want to call it, so YouTube doesn't demonetize this thing, is finally starting to be priced in at least a little bit. Let me look at some of the key market indicators for you guys. You guys can actually see the screen on there and hear me now, right? Because apparently, because of this new software, I was recording on my OBS software for 18 minutes and it wasn't playing. God, I hate new software. I hate technology. I hate new software. I really don't like being forced to upgrade this stuff. Just ridiculous. Okay, let me do a rundown of some of the key stock market indicators and markets that I was looking at today. So the Dow closed down over 1,000 points. It was down at 1,070 points, or almost 4%, before it did have a rally briefly a couple hours ago, and it still closed down 1,000 points. You had the VIX up over 46% today to above 25. You have the dollar index staying above 99 now for 12 days in a row since February 12th at 99.30. What was interesting to me was the oil market, and for my Patreon account contributors, I gave them a very stern warning that there would be a good buying opportunity for oil. There would be more blood in the streets with more bankruptcies, but we were not there yet. And today was actually, according to CNBC, which I have on mute in the background there. I also watched a little bit of Fox Business a couple hours ago, a little bit of Cavuto, where they've been marching on nonstop. People who are perma-bullish, people who are telling people to not sell any of their shares, people who are telling people that stocks will still do a good job and outperform in the long run. People are telling people to, if stocks go on sale now, to BTFD, buy the effing dip. People who are telling people that the earnings estimates for Q1 2020 are still positive. Oh my God, must be totally ignoring the reality of the global supply chain and all the news I'm seeing out of the global supply chain. And the oil market, according to CNBC, this was the worst down day for the oil market and oil stocks since August 2015. An absolute bloodbath in some of the oil stocks. The let me pull this up here. The Van Eck vectors. That's why I screwed that up. Say that 3 times fast. Van Eck vectors. Van Eck vectors. Van Eck vectors. Oil Service ETF, or OIH. Oscar Israel Harry was down over 7% today, down to $10.02 a share, minus 7.31%. Bloodbath. Another bloodbath today. The Spider SPDR S&P Oil and Gas Equipment and Services ETF, or XEX. Xavier Eric Sam, down almost 8% today alone. One day, minus 7.91%. This is why you don't want to own oil right now, because there is no certainty on when the global supply chain is going to go back. Chris Martinson had a very interesting graph in one of his videos over the weekend. Shout out to Chris, who's doing an unbelievably great job and not earning a cent making any of the videos. But he was talking about how the global supply chain manufacturing is out of China. And then, as you can see there on your screen, the additional parts of the supply chain. So some manufactured goods are started in China, like some auto parts and some generic pharmaceuticals. The starting chemicals start in Wuhan and other parts of China. Wuhan actually has a very large amount of auto parts manufacturers and also starting chemicals for the generic pharmaceuticals. But the a lot of U.S. manufacturers import over 35% of their materials from the supply chain from China. So that's really mucking up the supply chain. There's a number of different studies out there about how bad it is for the global supply chain. But I think now, after 2 or 3 weeks and all these professional money managers and stuffy shirts saying that the growth estimates are going to go unchanged, this is the CV problem or Cerveza problem, out of China is only temporary. It's not going to cause global supply chain problems. I think a lot of those people in the last week have finally flipped. They're going to dollars. They're going to gold. They're going to U.S. Treasuries. And that's why we're seeing the 10-year U.S. Treasury yield down enormously. Now, I talked about this before the start of recording. I guess it didn't go live because of the stupid software, which now it says it's live. But I was talking before I guess this went live about the 1 month here for the 10-year U.S. Treasury. Now, the 30-year U.S. Treasury is at, I think, an all-time low. So I talked about that on Friday. But since the dollar index closed above 99 again on February 12th, so 12 days ago, the 10-year U.S. Treasury has gone in yield from 1.626% down to 1.377. So clearly there is flight capital from professionally managed money going into dollars, going into treasuries, going into gold. So that's what that price action tells me. Also, people are buying the VIX. People are betting on volatility. Even Apple was down, I think, about 4% today. The semiconductors were down. You know, rationally, you would have thought that these things would have been down weeks ago with the Cerveza problem, CV problem. Another ETF that I was talking about for a month now that should have been down was the U.S. Global Jets ETF. You know, the airline stocks, the pure play for airline stocks. That ETF finally dropped a lot today. Finally pricing in global supply chain problems, how human beings are worried about the CV problems, the Cerveza problems, the new stories coming out from Air Canada, how there was someone with CV on a flight, from Montreal to Vancouver, how the amount of cases is definitely being covered up in Iran. Italy's going into panic mode. I think even trains from Austria to Italy were shut down, or some of the trains at least were shut down, maybe all of them. But the Jets ETF, which is the airline ETF, the pure play for airlines, it was down almost 6% today in one day, minus 5.88%. So down $1.79 per share. So finally that is pricing in some real big risk here. The global supply chain, look, you have to be either lazy, dishonest, or totally incompetent to not admit that there's big problems with the global supply chain right now and with travel. And you're either lying or incompetent or lazy to not admit that we have no idea when things are going to get back to normal. We don't. We have no idea when things are going to get back to normal. And the market hates uncertainty. It hates uncertainty. So that means there's going to be more volatility. That means things like the VIX may actually start to go. And if you're an options trader, again, this is just my opinion, not financial advice. If you're an options trader, long straddles, puts and calls here, long straddles betting on volatility, setting up hedged volatility trades, not a bad idea. If I was professionally managing money, this amount of volatility in the markets would be fun. There'd be a lot of trading volatility here with puts and calls. There'd be a lot of days where we're going to see 4 or 5% swings, sometimes during the day, and sometimes one day it'll be up 5%, the next day it'll be down 5%, or things along those lines. We're going to see a lot of volatility here now. Because anytime there's a press release from a country or a press release from a biotech company where there may be a cure or a vaccine, or like in Singapore's case where the amount of cases slowed down, the amount of people infected slowed down, people are going to look at that as good news. And then the BTFD crowd, the hopium crowd, and Warren Buffett is part of that crowd. Did you guys see that they basically marched? Well, I don't know if Warren Buffett can march anymore. Maybe they rolled him out either on a cane or a wheelchair. And they brought out America's favorite crony, America's favorite politically connected crony billionaire. And apparently Buffett is now an armchair virologist. So Buffett was talking about how, yes, it's the CV problems, the Cerveza problems are really bad for humanity. And yes, a lot more people might get infected. And yes, a lot more people may die. But the stock market is still going to go up a lot in the long run. BTFD, buy the effing dip. Do you think it was a coincidence? Put in the comment section if you think it was a coincidence that they brought Buffett on today when almost everything on your screen is red. Most of the gold miners are holding up pretty good, although it is kind of a mixed bag. Some of them were down, but some of them were also up. And then, of course, the Fed is talking about another rate cut. So I see these articles here, spread of CV lifts odds for Fed rate cut as inaction would be, quote, tone deaf. So here you have these stories from mainstream financial media talking about how the Fed needs to cut rates. The Fed should preemptively cut rates. The Fed fund futures are talking about rate cuts. But there's a number of stories I have here that I'll put in the information and description section about the CV could, or pervasive problem could impact 5 million companies worldwide, or 94%, another article, 94% of the Fortune 1000. And then there's the China studies out of Chinese universities that up to 80% of Chinese small and medium-sized businesses could be out of cash in 3 months or less. Bloomberg had a small and medium-sized China business study out recently that 90% of all Chinese small and medium-sized businesses surveyed could be out of cash in 6 months if things don't restart and get back to normal levels. You know, the people are starting to finally, the stuffy shirts, these professional money managers who off the record will talk to me. You know, they don't want to come on a podcast. You're too controversial. You're too controversial. You know, the people that me and QTR make fun of a lot. Christopher Irons, QTR. You know, they're finally starting to figure things out. It only took them 6 weeks. Yog says that Buffett's been holding a ton of cash for a long time anyway, even though he's not buying. Correct. Correct. Buffett has over $120 billion in cash. Also, another thing about Buffett is over the last decade, almost every company that he has either bought a large equity stake in or bought outright has within a couple years had either a very large accounting fraud scandal or outright fraud like Wells Fargo. So I don't know if Buffett can be an honest, hardworking investor that makes a lot of money investing anymore. He seems to want to go the easy route, which is accounting fraud. You can go look up the companies he's invested in, whether it's Wells Fargo, whether it's Kraft Mondelez, you know, a lot of them, accounting fraud or outright fraud in the case of Wells Fargo. So over the next couple months, we probably will get another Fed rate cut. I didn't look at the yield curve today before the show. Gold prices are holding up fairly well. Silver's closed above 18. It looks to me like we're going to have a lot more volatility, though. Apple and the semiconductors are finally pricing the CV problem in. Where is Ruth Bader Ginsburg? Well, that's funny. Okay, well, I think that's it for this short little update. I'm not even sure if this software worked right. That's how ridiculous things are. But I want to thank everyone for listening. I have just under, I think, 300 Patreon account contributors. Things are growing so quickly now. Thank you so much. And there is a lot of good paid content now behind the paywall for my Patreon account contributors. I think I put out 3 or 4 new pieces of audio podcasts in the last week or so. So I'm probably going to want to take a little break from doing that for the paid content. Now that I've got put out so much, I probably need to take a little break. But thank you very much to my Patreon account contributors and my PayPal contributors. I think it's over 300 total now when you combine them both. And to people throw me a tip once in a while, I do take the top 6 cryptocurrencies. And if there is more updates, I will be out with them. And all the surveys about the global supply chain, if you want to know more about it, you want to know more about the auto parts manufacturers in Wuhan, where there's been no manufacturing now for over a month, or the generic pharmaceuticals that we could run out of in 3 months, the generic drugs, I mean, because a lot of the starter chemicals are in Wuhan for those. Might be a good idea to stock up a little bit on some. Okay, I got super chat. Dimitri asks, I'll do this before I go. What do you make of the proposed SEC rule to tighten inverse and leverage ETF trading for retail investors? So they're assuming that the average retail investor cannot make sound decisions for themselves. So this is to protect the retail investors that are gamblers that lose all their money. So if you are the retail investor that manages your own money and you work hard and you understand the risks you're taking with the leverage ETFs and the inverse ETFs, and you understand that basically these are designed for day trading products, but the other retail traders are buying and holding these things and they lose 70, 80, 90% in a couple months of all their capital, or they lose almost everything, then the people who lose, the laws are designed for the people who are not as smart as the more astute, harder working, better reading retail trader who's not gambling, who is taking more calculated risks, I'd say, not gambling nearly as much. So you're still gambling, but you understand the risks you're taking, you're calculating them. So with a lot of these consumer protection and retail laws, they're designed for consumers. Like Michael Bloomberg was putting the sugar ban, the size of the sodas and the other stuff out for consumers who couldn't read labels. Oh, this is a good question. Good follow-up. Are they trying to cut little guys from shorting? No, I don't think they're trying to cut little guys from shorting, because you can still buy puts. You know, if you're, again, this is just my opinion, not financial advice. If you're going to do shorting, I wouldn't use the inverse ETFs or anything. I would just buy puts. And you can hedge puts with calls. You can do like a long straddle. You can make a volatility trade. There's smarter ways to short. Again, though, if we're going to have central bank intervention and the Fed's going to keep changing the rules and the Fed's going to cut rates, this is hypothetical, the Fed's going to cut rates 2 or 3 times more, and then the Fed's going to announce a new, not QE program to go from 60 billion per month to 100 or 120 billion per month. Is shorting going to work? Is shorting going to work for more than a couple days or a couple weeks or a month or two? I don't know. Other governments are already discussing banning short selling. So that's a problem. The rules can change. I feel like Charlie Brown and Lucy just keeps pulling the football. If you're familiar with that cartoon. Okay, well, thank you very much for listening. Hopefully the audio turned out all right. Again, I apologize. This is my first time using this brand new YouTube live streaming software, and it was a real headache. But unfortunately, I don't have a choice because they're getting rid of the old, more reliable software and telling me that this one's better. I think I accidentally did an 18-minute show before the YouTube allowed the stream to go. So my OBS software was saying that the stream was running and it was live, and the YouTube software wasn't properly synced up or coordinated with it. This is why I don't like technology very much.